Morning, everyone. Welcome to the 12th. And this is something that a lot of traders struggle with. And that is finding this balance, right? Now, sometimes it just slaps you right in the face and it's really, really easy to see. Like if I looked at it here, I'll see these lows, right? Those will work. But then where are the highs? So I've got those two highs, and maybe I'm too attached to those two highs. What I'm trying to find is an area where there's two-sided trade, and they're usually about 3.5 points. So I'm going to use those lows, that high, and then this is where it gets murky right here, right? So what I'm going to do, I just want to try something here. Okay, what I'm doing now is I'm using these two highs and I'm using that low, and that low repeats here. Anyway, I'm going to go with that. I'm going to see if it works. And if it doesn't, that's okay. I can always change it later. You know what? Hang on. See, this is what happens when you look at it too much. This is exactly what happens when you look at it way too much. You start second guessing yourself. So you see, it even happens to me sometimes. I've been doing this now for 12, it'll be going on 13 straight years of doing this balance stuff. But every once in a while, you just won't see it that morning. Maybe I'm too attached to those highs. Boom, 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 boom. Okay, I'm going to try this. It's a little tighter. I'll always change it later. Trying to find that two-sided trade. Notice that I'm more tuned into this. I don't care what's happening here. Do you see that? I want to talk to you guys a little bit while the market's trying to find its low. Okay. Somebody yesterday said that they were frustrated and they'd only really started learning how to really trade about a week ago. And they were like, I'm frustrated. Okay. I want to talk to you a little bit about one of my experiences when I first started off at the brokerage firm that I first started working at. And they sat me next to a guy. I was on the trade desk, and when you start at a brokerage firm, they pay you $2,500 for 3 months. And then that's it. No more salary. You're on your own. Eat what you kill, right? So they pay you $2,500 for the first 3 months. And after 3 months, that's it. No salary. And you got to pay for everything. You got to pay for your phones, so you actually, you end up owing them money. So if you don't get profitable with your deal flow and your clients, you're not going to be in business very long. So I started out in the first month that I make it $2,500. I've got maybe two or three, I've got barely nothing to my name. And the guy next to me was making 400 grand a month. And his name was Elliot. I remember it like it was clear as day because his mom had a circle of friends in Florida, and one of them was one of the largest promoters in South Florida. And the guy was running 20 deals simultaneously, and that guy was making, I don't know, $5-10 million a month. So Elliot was his main trader, and he was making, 300,000-400,000 a month consistently. And that'll mess with you. So what I want to talk about, when you're in a trading room, there's going to be a lot of people posting that they made so much money, yada yada yada. But I want you to remember that, first of all, they never post their losses. Okay? That's Trading rooms are famous for that. People will always say, I took this trade, I made so much money, but they're never going to tell you when they got stopped out. They're never going to tell you when they took a loss. You guys agree? You with me? Don't worry about the market right now. It's finding the bid, right? So nobody ever tells you, oh, damn it, I lost, I just had my ass kicked today, right? They'll always say, oh, yeah, I traded great. You know, it's like people who go fishing, I caught a fish this big, right? they never told you that, right? Yeah, right. Everyone's like, yeah, I'm a stone cold killer. I made 400 grand this month. They never ever tell you, I had a shitty day. Excuse my language, right? It's not nearly as fun, but business is not fun, Travis, right? So I want you guys to be aware of these things and change your mindset, okay? It's important that you do that because if you have this mindset where you're always worried about how other people are doing, this business will drive you completely, and excuse my language, batshit crazy, okay? Just focus on what you're doing. Don't worry, you know, don't worry about it. Other people are going to say they made this much or this much, or just don't worry about any of that. Okay. We'll get you there, but you just got to chill out. Okay. You got to chill out and focus and just worry about your own business. All right. It's hard. Retail trading is the hardest job in finance. Right. And I've pretty much worked every job in finance other than the securities cage. Right. Retail trading is hard because you can't cheat and you have no firepower. So what happens is you're underpowered, undercapitalized, and you really, really have to manage your risk more than anything else. This is very difficult for people. So I want you guys to know that no matter what the person next to you or what they're saying in the room, they made this amount of money, that amount of money, just ignore it. Put your blinders on and worry about your own business. I thought it's important that I cover this because we're going into the last quarter of the year. And that quarter, you know, when you go into the end of the year, there is a lot of unpredictable order flow because a lot of these hedge funds are trying to, as we say in the industry, goose their returns. What does that mean? That means they're trying to make their portfolios look more than they're worth. You'll see a lot of crazy stocks running, right? Yesterday, what did we have? Tesla. Tesla traded what? Over 2 million trades. So it's going to get really active going into the Thanksgiving holiday. Make sure you don't get distracted, right? If you're learning how to trade, right, just stick to the ES. Now, Tesla yesterday traded 3.1 million trades, right? There were 3.1 million transactions in Tesla, 1.5 million transactions in NVIDIA, right? That's a lot of trades. I remember the day Alibaba went public and it did a million trades. That was a huge, huge deal. Now we're at 3 times that on just a regular, normal Monday. Okay. So remember, this business is a marathon. Okay. It's not a sprint. You've got to take your time. Okay. Otherwise, it'll destroy you. That's why I talk about these things in this session, because the RT8 session is just full of jacked up traders. They don't really listen to what I say. So this Globex session, those traders, when you watch the replay, right? If you are watching the replay, right, this is for you. You got to just chill out going into the end of the year, especially if you had any kind of a decent year. You know, even if you made $50 a day consistently, that's significant because most traders don't make $50 a day consistently. They'll make 2 grand, lose it, give it all back, right? To make $50 to $100 a day consistently as a retail trader, that's actually significant. It sounds like no money at all, but try doing it. Right? Consistency, risk. Let's see if that 60, 25 and 3/4 is reactive. Has anybody got VWAP? What's VWAP at right now? No one has VWAP on this screen? 26. Thank you. Thanks, Shanghai. So we're hitting it right now, right? So there's going to be a little resistance there. Remember, overnight inventory is short. Okay. Thanks, T. Harrison. How you doing this morning? Good, good. Another one of our friends from London joining us. Always nice. And you know, Raj, when I told him I was in Liverpool, he didn't say anything rude. uh, why is that on? Hey, not Kramer, you can type your question in the Discord, please. So why are we all have different VWAPs? That's a great question. The reason is because Brian came out with this anchored VWAP thing and everybody jumped all over it like a dog on a milk bone. Institutions anchor their VWAP at 6 p.m. Eastern Time. I use 23-hour VWAP, which is session VWAP. Now, the reason I use that is because all the institutions use that. Because when you're working a 5 million share order, you only have time to look at one VWAP. You don't have all these different places, right? You're trading order flow against VWAP. So that's why I only use one VWAP. Now, if you're learning how to trade, Harrison, just set your VWAP at 6 p.m. Our time in the UK is 11. So it's 11 p.m. our time, 6 p.m. in New York. Yeah, Raj, I said I'm in Liverpool and he didn't say anything rude. How do you like them apples? All right, let's see if we could get above VWAP and take out those stops at 28. Overnight inventory is adjusting up. So we actually have a proper low in the overnight. We have 2 ticks of excess. Now there has been a seller here. And then that seller moved down to here. Let's see if we can get past that seller. Hey, maybe he doesn't even watch soccer. All right, we're back under 25 and 3/4. A little choppy. Yeah. Oh God. Oh, you guys will be all buddy buddy now. Isn't that your team? Every city has 2 teams in this country. I don't know what the deal is. All right. Seller at 25 and 3/4. Nope. We're lifting. Those of you who are looking for trades, I don't really see anything right now. I missed that look below and fail of 23.5 because I was second guessing my balance. Yeah, there's a rejection. There's 1, 2, 3, 4, 5, 6, 7. Yeah, you're right, Zeno. Now, I've got to wait. So I don't even have my trading software open. I mean, I run 3 instances of Sierra, so we just go open up another one. So I'm not even ready to take a trade. As you can see, I'm on SIM. There's no rush, Zeno. Remember, we want to pick up all of those contracts and vacuum them up underneath VWAP, right? It's like that wine commercial from the 70s. They will serve no wine before it's time, right? We want to try and suck out all of that cheap paper or cheap contracts, right? We want to get all of that. See, what's going on now when there's a seller at VWAP? That's like, when you have a towel and you twist it to get all the water out? That's what's going on right now. There's bids down here because there's still trap shorts. H period, when H period liquidated and I period couldn't even get down there, right? That was a clear long. And I wasn't even trading. I was not even in front of the screen when that happened. And that would have been a nice trade, in retrospect. But so you could tell that low here hasn't been taken out in the overnight, which means the shorts are trapped underneath the current low. Every time we get close to that low, do you notice the market finds buyers and pushes up? Globex is indeed a daily backfill, right? Because we closed it here, and this is us backfilling. You could see after this little move to blow off some inventory, you could see the highs are getting lower. And so you're backfilling, but those shorts are still bid there at 21. So this may take some time. It might just trade back and forth between 21 and 27. I'm really curious to see if we can get down here, but so far we can't. And inventory is short because 70% of the trading and the vol and the time is underneath the previous day's close. Yeah, that's right. We couldn't take out Thursday's high. Very good point. How you interpret that, my friend? Okay, I'm going to tell you how you interpret that. Then I don't want you to ever look at it again. Okay? Deal? If I'm showing size on the offer at 33, it means I'm a buyer down here in the 20s. And I'm trying, and do you notice that offer is far away from the current market? That's what we call a nervous offer. They don't actually, how many contracts is offered there? 260. Okay, that's not really big size, but that's a nervous offer. That's trying to convince retail traders that there's a seller and they should be selling here and they can put their buy orders here and collect. They don't really want to sell 260 contracts at that level. Now, that's 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 a size trader trying to weasel out some cheap inventory underneath 25. Yeah, it's forcing bids lower. But now that you know that, how is that going to make you money? It's not. And this is the thing, there's so much knowledge in this business. That piece of information is great if you, Harrison, were trading 5,000 ES contracts. But you're not. As retail traders, that information is completely useless to us because no size trader, unless they were sniffing a Tony Montana pile of cocaine and had not slept in 3 days, would ever show their intentions on a DOM. It's good that you're uncomfortable, Phil. That means your common sense is working. So if you're uncomfortable, what do you do when you're a trader and you're uncomfortable? How do you put that to good use? Size down, trade less. So Harrison, are you okay with that? Hey Georgie, what's going on? No problem. In retail trading, they're going to throw so much crap at you for information. And it comes from the age old saying, if you can't dazzle them with your brilliance, baffle them with your bullshit. And that's how capital markets have existed and thrived for thousands of years. Yeah. What you want to do is you want to stop looking at that because it's a waste of your mental resources. The reason you see it at quieter times is because there's less competition, so traders can try and weasel things out. But that's not going to help you put any money in your bank account. What's going to help you make money is watching your trade setup and doing it 500 to 1,000 times, managing your risk and watching the market. Everything you need to know is here. All you need the DOM for is putting in orders. Yeah, this FOMO thing I don't get. I don't understand FOMO. Maybe it's because I worked in the business and I grew up in the business. Can I say something? Maybe it'll help Phil. It's rather rude. And it's not an attack on you. Yeah, yeah. Okay, I'm gonna get rid of VWAP right now because we're just futzing around at it. Just gonna. Okay. FOMO is for suckers. Internalize that. I'm glad you said it. I'm not picking on you, but I want you guys to think like you're working in a business, not like you're a little old lady sitting with a bucket of quarters at Harrah's in Vegas. What's YOLOing? Jesus, you guys. What next? Okay. Anyway, yeah, that's if you guys listen, when you sit in front of a trade, tell yourself this in the mirror, right? Think of it as a trader affirmation. I am not a sucker. I am not dumb money. I will only think and act like smart money, right? Because you guys haven't worked in the business, they get you with all this crap, YOLO, FOMO, MOMO, DOMO, fuck, yodeling, all of this nonsense, which does nothing but separate you from your hard-earned money, right? I like to put an end to that. So every day, write down in your trader diary, I am not a sucker. I am not dumb money. I will only make smart business decisions today. Put yourself in that mindset. Okay. Put yourself in the mindset of a man like JP Morgan, of Cornelius Vanderbilt, of James R. Keene, right? I'm going to come in here and I'm going to be smarter than everybody else. I'm going to follow my setup. I'm going to sit and watch. And when my opportunity's there, boom, I go take the money and I get out. They won't even know I've been there. That's how I want you guys to think. Oh, yeah, I saw there was a movie about that. Didn't watch it though. Right. When I watch stuff like that, it makes me want to go back to stock promotion. It's like taking candy from a baby. Right. All right. I want to see you guys do well. And the only way you will do well is you have you ever heard the term operator, a stock operator? I want you guys to be operators, right? Conduct your operations in an intelligent business manner. Smooth is good. We always want to, you know, you want to, smooth is the goal, trade maker. I would like to always trade like Carlos Santana plays the guitar, right? But that level of mastery, that smoothness, that elegance in trading, that takes time, sometimes decades. But for now, I'll be a sharp or a shrewd operator, right? It's all about mindset. Don't be a sucker. I know it's unpopular for me to say that, right? It's not politically correct. But hey, I don't think losing money is politically correct either. And it physically makes me sick to hear that people blow up accounts and lose money. Because back in the day, if they were working at the firm, they'd be loading up a cardboard box with their belongings and getting shoved out the door by security. Good stuff, Phil. Good stuff. You know, see, there's that offer lifting over the blue line in printing. Now we've got two sets of stops above where we are right now. So it's going to take some juice to take out that 27 half. Let's see if we can print 27 half. Nope, seller steps in. Exactly, Raj. Just like when you guys are jumping out of planes. There's obviously some sort of training for that. Same with trading. Hey, we had a half print. So we took the K high by one tick. Now, I want you to, this is where observation helps, right? When the market takes out a high by one tick and then moves lower, it means the sellers were sitting there and waiting for that buy order to execute and they dumped into it, right? Because as I think it was Zeno was saying, it's still early in the night and we're still trying to get every little bit of inventory. So what the large traders do is they're buyers down here and they're sellers up here. That's why we have balance. And they're trading that way until more people come into the store. So they'll hold the market this, order flow depending, right? And they'll build out that position here. That's why you see time and you see volume. And then there's the volume point of control, and this is distribution. This is accumulation. Sometimes it's not tradable. right? So it looks like a look below and fail. It looks like a look above and fail, but there's like a bit of a wall here at 25 because that short bid has moved from the 20s up here to the 23, 24, and they're front running it here. See, this is why if you pay attention to a 1 minute candle chart, it'll give you so much information that is not in a book, right? All these candle charting books are fine, but they leave out all the good stuff. Is like, how do you spot the seller? Don't worry about the pattern, right? You don't need to know about the ascending giraffe upside down koala bear pattern, right? Just look for the bid and the offer. And once again, disclaimer, I'm not knocking technical analysis people, but wouldn't you like to know why your pattern works or doesn't work? There's no way you can memorize all those patterns and then have a and retain those patterns, execute on them while you're getting punched in the face. It's impossible. And it's just, there's no way that you can. That's why it takes people 35 years to learn how to trade off of patterns because the amount of memorization is insane. Knowledge is better than just memorizing things. So immediately when you see stuff like this, you walk in, you do your balance zones, you set up, you look, and you go, oh, this is not tradable right now, right? Right. I'll write this down, right? So we still have sellers up on that 25 level. Let's see if 23 and a half is a bid. Aha, nice. That's very cool. Yes. The explanation might take some time, Hex. Hang on. The practical takeaway. Is that okay, Hex? I'll explain that, but it's going to confuse the crap out of everybody in the room. So after this Zoom, after I stop recording, I'd be happy to explain it if you're interested. I could tell you exactly why it happens, but it's going to confuse the crap out of everybody in the room and it'll make life a lot more difficult. Okay, a little look below and fail of 23. I imagine there'll be a seller at 24.25. So this is almost like a vacuum cleaner, right? We have people who are long above and we have limited order flow tonight, right? So the market is just going back and forth in this range. And what the wholesalers do is say I drew a level in the middle. So what happens is above this level, they are sellers, and below this level, they are buyers. And it's the same people on both sides of this box. Okay. So if I were to even draw another balance, like a big, right? This is our what we call our current rotation, right? So in the middle of that rotation are where the size traders flip from the bid to the offer. Hey, Doc, what's going on? Yeah, we don't have any follow through upward yet. That's why I'm watching that low. So what's going on is where this green line is, the large traders are buyers here and there's sellers here. So how I would work this now, say if I was long 500 contracts between 21 and 24. As soon as it gets 24 and a quarter, I'm on the offer. I'm a seller. I'm a seller. I'm a seller. I'm a seller. If it dips back underneath, I will sell down to my cost basis. We're right at the overnight cost basis. So just be careful trading this until we get some more order flow into it. If you could scalp it, fine. All right. Bids at 23 again. Very slow. Slow market. Anybody have any questions? Nothing? All right. All righty. So most of you, this is the time where you should just go do something else. And if you're really, really bored, you can sit and watch the offer as we transact, around levels and learn price action. One exercise you can always do, no matter if it's slow, if it's fast. One thing you can always do is you can practice and develop your concentration. Okay. Try looking at one chart. Just try looking at one chart for more than 2 minutes. Right? Try watching the chart for 2 minutes without any distractions. Okay? Focus. Learn how to concentrate. Don't look at your phone. Don't look at the VIX. Don't look at anything else. Watch 60, 25 and 3/4 and watch the offer. I swear if you do this and you build up your level of concentration from 30 seconds to maybe 20 minutes to an hour, your trading will drastically improve. The amount of stop outs will decrease. The dollar amount of your stop outs will improve. So your business expenses will decrease, right? A smart operator manages his business expenses. Your stops are an expense. They're insurance and they provide information. But you want to not spend too much money. Make sense? So if you were a business operator, you want to always get the best deal on your expenses, right? Anybody here have a business? Right? Is anybody here? Oh, okay. All right. So work on those kinds of things, right? Practice, practice your focus. Don't worry about where the trade is. Get that out of your head, right? Watch the offer at 25 and 3/4. Now, if we can offer above it, where were the sellers last time? Well, they were right here. See? Right there. And we offered there and we printed. Now, If we can offer and print over 26, that means the sellers see buyers and they can raise price. See? So the sellers can see they've seen some buyers and that they can raise price. How long will they raise price? Until other sellers start to compete and they have to lower price. Make sense? Pay attention to this. Don't pay attention to the DOM. Don't look at footprint charts. Don't look at anything else. See if you can focus on this, because I tell you, my friends, this is the gold. This is the, you know, this is the holy grail. This is order flow trading. This is all the media buzzwords and marketing buzzwords that you guys have bought into. This is where it all is. It's boring and it's simple, but it's how the business works. So right there at 26, we went and printed higher. And what happened? The sellers stepped in and started competing to grab the buyers there, right? Because your job is to identify where the sellers and the buyers are competing. Then your job is to get in front of them. That's what your job is as a retail trader. Your job, because you don't create the buying and selling, your job is to find out where the buyers are, get in front of them, let them push the market up, and then get the hell off the bus. Your job as a trader is to find out where the sellers are, sell in front of them, and then as they push the market down, you cover. So say you were short 25 and a half, you can see that there are buyers here, right? There are bids here. So it's not that great a trade to take. That's your job. Your job is to get in front of the seller and the buyer and take, when it goes like this, that's your trade. When it goes like this, that's your trade. Then you have a defined stop. Your risk is managed. If the order flow takes you out, then the reason for that trade doesn't exist anymore. Once the reason for a trade doesn't exist, there's no reason for us to be in the trade. Every trade is built on a business principle. There's a business reason to take the trade. If you don't have a business reason to take the trade, there is no trade. If, then. If the business reason exists, then you take the trade. If the business reason doesn't exist, then you do not take the trade, right? If the business reason goes away, then you get out of the trade. Make sense? Real simple. Right? The other thing is, when do you trade? Right? And when do you not trade? Because all retail traders lose money because they trade at the wrong time. This, you don't trade. Most of this that I see here, all of this stuff here is untradeable. Maybe there was a trade here. There was a look below here and fail. So you're long, stop, target. Out of this whole period of time, there's really only one trade. Oh, there's two. There's a look above and fail. So in this whole time span, there are only two real trades. Do you guys see that? So from 518 to 8, out of 3 hours, there's only two legitimate trades, right? Here and here. The rest of it is garbage for you, right? Let me put it to you this way. These trades are shopping in Beverly Hills. The rest of this is dumpster diving. Okay? It's not even as Daraj. That'll save you about 90% of your money because most people trade at the wrong time. Okay. Uh, Thanks everyone. I'm going to let you guys go. What I'm going to do is I'm going to stop recording and then I can talk about that order book stuff, which I will explain. And then I want you guys to forget it. I wish I had that Men in Black thing where they flick the little thing and everybody sees the light and it just erases their brain. All right, I'm going to stop recording. Have a great morning, everyone. Exactly.